Good morning, this is Larry Edelson for my Uncommon Wisdom video for Thursday, January 14th. We've had quite a few moves this week and a lot of action, so let me get right to it. Earlier this week we saw some very bullish news out of China. Industrial production up substantially, fourth quarter GDP up over 11%, putting the full year 2009 GDP for China at 8.9, possibly even 9 or 9.1%. This bullish news out of China set off some very substantial moves in the commodities. We saw gold jump substantially up to about 1160 or so, oil up to about $84. We saw the dollar start to sell off on the bullish news on China, and we saw many other commodities soar to the upside. Later on late Tuesday afternoon, word got out that China had raised its discount rate, the Bank of China that is, had raised its discount rate, tightening credit conditions just a wee bit in China, and we started to see a sell-off back down in gold, oil, and commodities. So we had some wild swings early this week. I expect them to continue into Friday and into early next week, but there's been no trend changes on a short-term, intermediate-term, or long-term basis. I want to show you the gold chart right now that we've been following, because this is the key main chart for the daily action in gold. You can see last week, here's what I was talking about, is support in gold, and lo and behold, gold bounced up to the upper part of this channel here, and now it's come back down. We could see gold test this support level in here at 1125 again, even get down slightly under $1,100 again. But there would be no trend change if that were to happen. You can see between $1,200 and $1,080 on gold. Yes, that's a $120 range, but it's essentially meaningless on an intermediate term basis. The long-term trend for gold remains substantially higher, and I expect any pullback to find additional support in this area again, and I would be a buyer again. The dollar, as I showed you last week, excuse me, started to sell off last week and then sold off even more sharply on the very bullish news out of China. You can see the dollar almost falling back out of bed here. I expect we could move back down to 75.8 level on the dollar index and then trade sideways again. However, if we were to break this line and get much back down into the 75.2 level, I would not be surprised to see new record lows in the dollar sooner rather than later. Long term, the downtrend in the dollar remains very, very much intact. In stocks, we've seen similar action. First, a spike up, and then a little bit of a sell-off starting on Tuesday in the Dow. But you can see this is still a very bullish chart. As long as we continue to stay above this support level, above 10,250 or so, the trend remains up for the Dow, although it is getting a little bit toppy. And I am watching that very closely there for any changes in the cycles. That's about it for right now. We have several recommendations in my publications that are doing well. Some that are flat and some that are on the downside a little bit, but I remain confident that the trends that I've been following for you remain very much in force. Please stay tuned to my Monday column and to my Real Wealth Report for detailed studies and recommendations on all these markets. And until next week, have a good weekend. This is Larry.